Let's start the episode with one good quote from Warren Buffett. Do not save what is left after spending, but spend what is left after saving. As we discussed earlier, we are going to invest at least 20% and we are going to spend from the remaining 80%. Here, our target is to create wealth, right? First of all, what is wealth? Wealth is not a complex term. It just means having lot of money and property. Simply, it's state of being rich.
I'm rich. Hey.
To create wealth, we should have a balanced portfolio. To create balanced portfolio, we should invest into different segments like stocks, real estate properties, low risk fixed income and medium risk fixed income investments. We will discuss each of the section in detail. Please watch till the end. Now the major question is, how can we select stocks for long-term purpose? And what are those stocks? Yes, now we are going to discuss about it now.
చాలా ఉన్నాయి ఇంకా దాచాం.
If you want to invest in any company for long-term purpose, first of all you need to understand their nature of business and their products and services. And also you need to check whether these products and services are having demand in next 10-15 years. In addition to this, you should also check certain conditions. If you see the screenshot, there are 7 conditions in query table. Here we are focusing more on sales growth in 10 years, average return on equity in 10 years, debt, free cash flows, market capitalization and price range. Further, if you talk about these 7 conditions, anyways you will check revenue and profit and return on equity in 10 years. In addition to that, you need to check debt and free cash flows. So if any company is running majorly on debt, it's a bad sign for you to invest for long run. And you need to make sure debt equity ratio should be less than 10%. Of course, it depends on industry also. And the next one is free cash flows. You need to, before investing in any stock for long run, you need to make sure whether the company is having enough free cash flows. I have filtered with 2000 crores here, but you can do with 1000 crores also. The most important thing before you invest in any stock for long term purpose is you need to check whether that stock is trading at below 200 days moving average and 50 days moving average. I will be discussing how to check these conditions. Now if I filter with these 7 conditions, I am getting the list of 13 companies. We will take any one of the company from this list and we will analyze it. Let's take HCL Technologies. It is a top 5 IT service companies in India. There is a huge demand for IT companies in coming 10-15 years. And if you see the chart, there is a red circle. That is current market price. And those orange line and grey line represents 50 days and 200 days moving averages. Both ROE and ROCE are more than 20%. We are good with it. And PE ratio is 18.4. Let's discuss a bit about PE ratio. Generally, more PE ratio means more people wants to buy the stock. That means there is a demand for the stock in the market. And since our stock's PE ratio is 18.4, that means we are paying 18.4 times more than what stock is earning for us. But we need to check whether this stock is overvalued or undervalued. To check that, we need to compare with industry PE ratio. And if you see the screenshot, industry PE ratio is 28.3 and our stock's PE ratio is 18.3. That means our stock is undervalued. Hence, we can consider this stock for our investment. And one more point to keep in mind, whenever we are creating a portfolio, we should diversify our portfolio into different industries and we should not invest more than 10 to 12% in any stock. If you see this screenshot, this is the screenshot of percentage of holdings of one of the famous mutual funds. So they are diversifying their portfolio into different industries. If you see their marketing, banking, software, housing finance and constructions. And they are not investing more than 12.48% in any stock. Now let's see how to apply these conditions and where to look into. Once you open screener.in, you will get to see create new screen option on top right side. If you click on create new screen, query table will appear to you. Then you can give all these conditions in query table. Just you need to remember that at the end of each condition, you need to type and, except for the last condition. Once you type all your condition, you can click on run this query. Once you click on run this query, The list of stocks which will satisfy these conditions will appear to you. Next investment option is mutual funds. There are different types of mutual funds available in the market, like equity funds, debt funds, hybrid funds, and index funds. These are generally managed by fund managers. Fund managers collects money from different people, and they will invest in different securities. Whatever the returns they get from these securities will be passed on to investors, and they will charge certain amount of fees for managing the fund. It could be like 0.1% to 2%. Before investing in any mutual funds, you need to check certain factors like expense ratio. It should be less than 2%, and 5 years CAGR, it should be at least 15%. And you also need to check previous experience of fund manager. Here is a list of mutual funds which are in my wish list. You can make a note if you want. We will be having a separate episode on real estate, that what are the different investment opportunities available in real estate, and how can we make use of FD, RD, PPF and NPS.
అంటే
Hey, hi Ravi, good afternoon.
Hey, hi Seva.
How it is going, work from home and all?
Yeah, it's going good. How are you? How about you?
Yeah, I'm doing good, man. So majorly, like, I think you build a 10 lakhs portfolio, right? I think in short span of time. So we'd like to hear
Yeah.
from you what was your investment strategy, and what is your motive, and any measures you took before you plan for your investments.
Yeah. As you said, it's not within the short term. No, it took almost 1 year for me. And then coming to my personal strategy, I'm very bullish on IT stocks. I invest a decent amount in mutual fund every month, and then I'm very bullish about monopoly stocks of the IT. When you talk about service sector in railways, so IRCTC is the only stock, so it has 100% market capitalization in that particular sector. So similarly, when we talk about energy exchange sector, so there is only one stock which is IEX, Indian Energy Exchange.
Yeah.
So similarly, we have CAMS, we have CDSL, and also we have Apollo Tubes, APL Apollo Tubes. So and also Pillite Industries. So there are so many monopoly stocks in Indian stock market. My portfolio contains only 22 stocks. So I don't want to increase the number of stocks, because when we try to increase the number of stocks, so what will happen is, so it will be very difficult to track our portfolio. Like
Yes.
let's say if we have 50 stocks in our portfolio, it will be very difficult to track what is happening in that company. So if at all, if you want to invest for long time, so I would suggest to go with market leader in each and every sector. Like for example, I'll give you a few examples in sectors. Like let's talk about FMCG sector. So in FMCG sector, we have mainly 3-4 stocks: Hindustan Unilever and ITC, and we have Nestle, Dabur. Like this, we have 3 to 4 sectors with the market leaders. So you can choose one or two in these 4 stocks, and then when coming to banking sector, we have ICICI Bank, we have HDFC Bank, which is the market leader, followed by ICICI Bank. So my portfolio contains at least 7 to 8 sectors. So you choose at least minimum 5 sectors, and in each sector also you should pick some 3 to 4 stocks, or at least 2 to 3 stocks you should pick from each and every sector.
So basically, to summarize your points, you're saying you should not have more than 15 to 20 stocks, and that too, you should select any seven industries, and out of industries, we need to look for the market leaders. Thank you for your time and your inputs, Ravi. Looking
Yeah,
forward to
thank
seeing you in further sessions.
Yeah, sure.
Thank you.
Yeah. Thank you.
Hey, hi Sampras. So,
Yeah, hi Seva.
you are observing the market closely from 10 years, right? We would like to hear some tips from you for short-term trading.
For those who are working employees, I personally suggest them to go with swing trades, because they had a very limited limited opportunity of time to view the graphs. So it's better to go with swing trades.
Yeah.
When you choose for the short-term trading, there is nothing much to do with fundamental analysis. The only thing you need to go with your mind is completely technical analysis and completely candlesticks only. You need to completely rely on candlesticks only.
Yeah.
In short-term trading, you need to maintain strictly stop-loss orders, because due to the volatility of the market, you may enter into huge losses. So to avoid these things, you need to maintain strictly stop-loss. The final point is like, never ever select the stock which is having any event on that particular day. It's better to avoid those particular stocks.
Okay. I think those are great points regarding stop loss and swing trading. And you also mentioned about the stocks which we should not pick if there is any event. Thank you for your time and your guidance and inputs. So looking forward to seeing you in upcoming videos.
It was great talking to you, Sai. Yeah, sure.
Yeah.
खत्म, बाय बाय, टाटा। मजा आया, और मैं ये जो मजा है हिंदुस्तान के हर व्यक्ति को देना चाहता हूं।